You know, if you just glance at the market, things look pretty good, strong even. But if you look a little closer, you can feel it, right? There's this nervous energy, this anxiety that the big headlines just aren't capturing. So today, let's dig in and figure out what's really going on as of February 7th, 2026.
And that leads us to this really puzzling question. I mean, the economic data, it's strong. By all accounts, investors should be popping champagne corks. But they're not. Instead, they're just laser focused on risk. So what gives? Why this huge disconnect?
All right, so here's how we're going to tackle this puzzle. First, we're going to take the market's pulse. Then we'll dive into three key pressure points. You've got tech's massive, high-stakes bet on AI, a global scramble for resources, and this regulatory storm brewing over crypto. And then we'll tie it all together and see how politics is basically rewriting the entire rulebook for the economy and what that actually means for all of us.
Okay, first up, let's really put our stethoscope to the market here. We're going to tune out all that day-to-day noise, the numbers that flash across the screen, and instead, we're going to listen for the real heartbeat, that anxious pulse that's telling the true story.
So this anxiety, it's not just one thing. It's more like a perfect storm, right? You've got these four major fronts all colliding at once. There's this absolutely massive spending spree in AI, which in turn is kicking off a desperate scramble for physical stuff, for commodities. At the exact same time, you have the regulatory hammer about to come down on crypto, and all of this is happening while geopolitical tensions are just ratcheting up. So let's break each of these down.
All right, let's start with maybe the biggest gambler at the table right now, big tech, and their absolutely massive, high-stakes bet on AI. And I want to be clear, this is not just another investment cycle we're talking about. No way. This is a full-blown arms race, and the numbers involved, well, they're just staggering.
I mean, just to get a sense of the scale here, look at this number. $2 trillion. That's the combined revenue in 1 year, 2025, for just 6 of the big tech giants. And a massive chunk of that cash is now being funneled directly into AI. That kind of money, it creates its own gravity. It literally pulls everything else into its orbit.
And this quote from the CEO of NVIDIA, it perfectly captures the kind of, chaotic philosophy behind all this spending. This is not about careful, calculated, spreadsheet-driven decisions. Nope. It's a let 1,000 flowers bloom strategy. Basically throw billions of dollars at the wall and see what sticks. Now, that could lead to some amazing breakthroughs for sure, but it's also wildly unpredictable. And that is exactly what's making the market so nervous. So, this whole situation creates a huge dilemma. On one hand, you have this absolute need to innovate. You just have to experiment to stay in the game. But on the other hand, all this colossal spending is putting a real strain on the credit markets. I'm talking about bond managers starting to get really worried because, hey, all that borrowed cash, it has to come from somewhere, right?
And what's really crucial to understand is that this disruption, it's not going to be even. The CEO of Areas Management really hit the nail on the head. He said, AI isn't some rising tide that's going to lift all boats. It's more like a massive wave that could totally swamp the smaller players. Think data analytics firms, while the big, entrenched enterprise systems just kind of ride it out. So what you're getting is this really clear divide between the future winners and losers.
Okay, so this digital arms race in AI, it has a very real, very physical consequence. I mean, all those servers, all those chips, they have to be built out of something, right? And that is fueling this absolutely frantic global scramble for the raw materials that power all our tech.
Just take a look at these prices. We're talking record highs. Terbium is now $4,000 a kilogram. And listen, these aren't just normal market ups and downs. Nope. This is a direct result of China's recent export curbs on these critical rare earth metals. It's like they've just turned up the heat on the entire global supply chain.
So you might be thinking, why should I care about a $4,000 price tag for some metal I've never even heard of? Well, here's why it should make you nervous. Because these aren't just abstract numbers on a chart. They are the essential, non-negotiable ingredients in the EV you might be driving, the phone that's in your pocket right now, and even the critical defense systems that protect entire countries. Okay, so we've gone from the scramble for physical resources. Let's pivot now to the battle over digital ones. This brings us to the third major source of anxiety, that perfect storm that's gathering over the world of crypto. And it's a storm that has threats coming from both the outside and from within.
First, let's talk about the risk from the inside. A huge part of the crypto market is built on something called leveraged structures. Now, in simple terms, that just means people are making huge bets with borrowed money. And yeah, that can magnify your gains, but it also massively magnifies your losses. It creates this incredibly fragile system where just one big failure could trigger a whole cascade. So you've got this fragile system on the inside, right? And at the same time, a major threat is closing in from the outside. Governments are stepping up their game. For instance, China just banned certain stablecoins, flat out calling them a threat to its monetary sovereignty, basically its control over its own money. This isn't just some warning shot, folks. This is a major power play, and we're starting to see similar moves from central banks all over the world. So, you put it all together. You've got a fragile system on the inside and immense pressure coming from the outside. It all boils down to one absolutely critical question. What happens to the flow of money, the very lifeblood of this system, when governments are tightening the screws and the whole thing is so fragile it could collapse like a house of cards? So we've got anxiety in tech, anxiety over resources, and anxiety in crypto. And this brings us to what I think is the single biggest theme of 2026. We are now in an environment where politics is trumping pure economics. It's become the primary driver of everything the market does. And the signs of this shift? They're absolutely everywhere you look. The market is basically ignoring strong U.S. economic data because it's far more worried about geopolitics. You've got European nations scrambling to lock down trade deals, not just for the money, but for political security. Even currency markets, like the British sterling, are reacting more to political headlines than to things like interest rate policy. It's become crystal clear that investors are watching world leaders a whole lot more closely than they're watching economic reports. And this quote here from Howard Lutnick, it just perfectly captures the powerful feeling that's driving this entire shift. There's this growing belief that the old model of globalization has been, well, a failure for a lot of people. And that sentiment is what's fueling calls for huge policy changes. We're talking new tariffs, new trade barriers, things that could completely reshape the entire global economy as we know it. Okay, so in this really complex, really anxious new world, what's the takeaway? How in the world do you navigate all of this? Well, we've boiled down our whole analysis into 3 key rules. Think of them as rules for a new era.
All right, here's the new playbook. Rule number 1. When it comes to AI, you have to throw out the old spreadsheets. The new rule is all about embracing experimentation. Rule number 2, for crypto, you cannot assume the system is safe. The rule is you have to actively hunt for those hidden leverage risks before they come back to bite you. And finally, rule number 3, in this new market, economics takes a backseat. The rule is you have to start thinking like a political strategist, trying to anticipate the ripple effects, what they call the second-order consequences of every single tariff, every single sanction.
And all of this leaves us with one final and I think critical question to chew on. When you look at the stock prices for, say, an electric vehicle maker or a major defense contractor, the companies that absolutely depend on those rare earth metals we were just looking at, is the very real risk of a fragile global supply chain actually priced in? Is it really accounted for in those valuations? That question is at the very heart of today's anxious market.